Roughly 6 weeks ago, we sat down with Carlos Rodriguez. He's the CEO of Automatic Data Processing to talk about his contentious proxy fight with Pershing Square Capital Management and its leader, Bill Ackman. Pershing Square released a rigorous 168-page presentation. Took me a full day to read. My wife was not happy, outlining ADP's shortcomings, but I liked it. And he laid out a plan to turn things around. ADP attempted to shoot them down and fired back with a 69-page presentation of its own that had a lot of good facts. The whole dispute has gotten a little bit vitriolic and personal. It's likely to come to a head in a month from now at ADP's annual shareholder meeting. So I thought that maybe we can notch it down a bit, just do a few more with the fundamentals. And since we already heard from Carlos Rodriguez, I want to check in with Bill Ackman. He's the famous activist, runs Pershing Square. Hear his side of the story, hear about some of the other major holdings, too, if we get a chance. And, of course, the questions he's putting to the company. Mr. Ackman, welcome to Mad Money. Good to see you, sir.
Thank you, Jim.
Okay, Bill, we have a long relation. I know that what you try to do is make things be as substantive as possible. You have been issuing a question a week, basically, to ADP, and I'd like you to start the new one on Mad Money.
Okay, so our new question for ADP is, why is it that ADP has lower revenue productivity than all of their competitors? So ADP has an average generates about $160,000 revenue per employee. The competitors average $224,000. Very straightforward question, and when you think about ADP, it has enormous scale versus the competitors. So if anything, they should have more efficiency.
Now, there was an issue back and forth where you were saying that the expenses have overrun the revenues. They've come back and say, well, that's not really a great, necessarily true comparison. But obviously, you wouldn't ask this question unless you had done further.
No, look, the reality is if you look over the last 6 years, Paychex, actually you had the CEO of Paychex on yesterday, and you asked him the question. You said, why is it that your margins are higher than ADP? And he said, look, we're very careful about expenses. We use technology very effectively. And these are the things that we'd like to see ADP doing.
Just give people a sense, because I know Paychex, they very quickly went to mobile. Marty Musi runs the tightest ship in the world. You think that a lot of what Musi does can be applied, even though Automatic Data is large business and Marty's small to medium.
Actually, to be clear, ADP is 25% of ADP competes directly with Paychex. Same size customer. So what we said to ADP, and actually I heard you ask this question, Paychex has 41% margins, pre-tax profit margins in their business. But they're largely an SMB company, small and medium-sized businesses. ADP's SMB segment is, if it had the same margins as Paychex, it would mean the rest of their margins are 12%. Okay. And that makes no sense. So clearly there's a big opportunity.
Now, one of the things that I was looking on Twitter, I posted that you were coming on. A couple people asked a question, which is, hey, ADP's done well. Why go after ADP? They've beaten the S&P. Why doesn't Bill go after some companies that he went after historically and really Canadian Pacific and really turn their company around?
It's all about the opportunity for improvement. So we think ADP is a great company. It's done well over a long period of time, but it has massively underachieved its potential. It's about its potential. And one of the ways you can see that is ADP spun off a company called CDK. I don't know if you followed it closely.
No, we recommended it because we knew once it was on its own, it would have a kind of a laser-like approach to its business.
So that's what we need. ADP needs to pretend it's a spin-off. You look at CDK, when it was owned by ADP, they said, look, we can get maybe 50 basis points, 0.5% of margin each year in the business. Once it was spun off, same management team, different board of directors, took out a blank sheet of paper and said, how do we run this business more effectively? They've taken margins up 70% in the last 3 years. The stock's up more than 100%.
It's been a very big win, and they did a great job.
Why shouldn't ADP shareholders have that same opportunity?
All right, now let me ask you, I've been following, very closely this Procter & Gamble situation. And one of the things that they've been contesting is, well, the board, how's Nelson Peltz done versus the current board of directors in terms of performance? I looked at how some of the, Mr. Unruh has done. The companies that he's joined in the time that he's been a board of director have not outperformed ADP. Should we care about that?
No, I think the comparison here is, how is ADP's performance relative to the competitive set? If you look at ADP's total shareholder return under the last 6 years compared to its competitors, underperformed by about 20%. You don't compare the airline industry. Airline stocks have done well. You don't compare how they've done versus the S&P. You compare them against other airline stocks. The same thing's true with ADP.
I felt that way about the Procter, but I thought that they were making that point and bring that up. Now, there's a question about the percentage shareholder. You said you're an 8.3% shareholder, and we know from other situations you've used instruments, like a lot of people, to say you're 8.3, which is true. That's the actual amount. But you really, in reality, made yourself a 2% shareholder. Did you not want to spend the additional $2 billion, or is it irrelevant?
Yeah, so the answer is we're the third largest investor in the company by dollars spent. So we've got a $2.3 billion investment in the company, and we own we own 9 million shares of stock in the company, and so our interests are very much aligned with the other owners of the company. And one of the points actually we make about the current board, and one of the benefits our board brings to the table, look at all the directors on the board. Our candidates who haven't even joined the board yet have spent more money to buy ADP common stock for themselves than the entire board has spent in the last 14 years.
I think that's very important.
So I think shareholder ownership is valuable with a $2.3 billion investment. And by the way, I don't take directors' fees, so we waive them on behalf of Pershing Square. So I'm going to be dollar for dollar aligned with the other investors in the company.
Well, let's back up for a second. You're being, what I like, clinical and rigorous, which I know you are. There's no rancor. And I like that, too, because we all got to notch things down.
Sure.
How does it get rancorous? Is it the advisors? Or, one of the things that Carlos said to me is, like, why did you wait until August 1st to first contact? Why be so quick to launch a proxy contest? I know that Nelson Peltz spent a long time with Procter to try to get them convinced, and DuPont, and that was another way to do it. Was that a decision that did breed some rancor? Do you regret it?
No, I mean, actually, you look at Nelson Peltz, he spent 6 months talking to Procter & Gamble, had multiple meetings, and they're still having, I would say, a much more hostile battle than we're having at
And that's true, I'll confirm that, that's true.
And part of that is, I think the advisors who advise companies on defending themselves from activists is they say, look, you don't want to show that you're even open to what they have in mind. Because if you do, then a lot of new people are going to come into the stock, a lot of more event-driven investors, and they're going to make it inevitable. You're going to lose a proxy contest. Right. So part of this, I think, is more tactics. I met Carlos. Seems like a nice guy. Don't know him well. Our private dialogue was all cordial, but when he went on TV, he behaved otherwise. Since then, now again, we haven't heard from Carlos in a long time. The company clearly seems to have dialed down the temperature. I think shareholders really, all they care about is there an enormous opportunity to improve this company? Can adding a major shareholder to the board increase that probability? And I think the answer that we're hearing is yes. Okay,
I know that we're here mostly to talk about automatic data, but a company that I've liked for a very long time, been a backfill on Chipotle, I feel has lost its way, could use someone like you to step in. Any sense that it can bottom, that the things they're doing now are right?
Yes, and let's take a look at what happened there. We bought a stake in Chipotle about, it's almost a year, actually. Right. But within a relatively short period of time, after meeting with the management of the company and meeting with some,
good guys,
very good guys, they said, what, we think you guys can help. They gave us 2 seats on the board.
Right.
They put on a couple new directors that brought relevant experience in addition to our directors. A few directors stepped off. So there's a complete turnover in the board. They had a co-CEO situation, which is often dysfunctional.
Right.
They fixed that. They brought in a chief restaurant operator. This is a company that had an amazing concept, great food, but wasn't as disciplined operationally, perhaps, as it's just not best in class, and that some of those issues affected the company. Obviously, probably partly why they had a food safety issue. Right. So we think they're adding key people in all the key areas.
But it takes some time for people to forget.
It takes some time. Right. We do think they're on a way to a recovery. Right. They got a little bit unlucky with a sick employee in one store.
Exactly.
But look at what they're doing now versus, historically there was almost no menu innovation. They've announced queso. Right. By the way, it is excellent. Okay. And I like the product. 2, they're going to have margaritas. They're going to launch dessert.
I'm so in favor of that. No, these
don't sound like innovations, right? But again, the company was a little. One of the points we make about ADP is sometimes when a company gets far ahead, it becomes complacent. Right. And complacency is the death knell for a business. Yeah, that's true for Chipotle. Chipotle is no longer complacent. When your stock goes from 750 to 300, the CEO becomes extremely motivated. You're going to see menu innovation. You're going to see technology innovation. They were slow in terms of introducing technology. That's changing. They're going to have a best-in-class mobile app. They hired an executive from Starbucks.
I know, very good executive.
So I think they have the right people. They got a great concept, and they'll recover from this.
I want to ask you one that I don't mean it to be personal, but please. Joe Papa was a good friend of the show from Perrigo. I think he's come and done some remarkable things with the balance sheet. Now, I know you left that situation, but aren't you impressed with Joe attacking that balance sheet to give him breathing room to turn this company around?
Yeah, I'm a big fan of Joe Papa. We stepped into Valeant after the stock collapsed. We were not on the board, and unfortunately, we should have been. And again, this was a lesson to us. You asked me, why do we want to join the board of ADP? My experience from Valeant is we want to be on the board when companies are making major decisions. Joe is, I think, doing an excellent job.
Good. I'm glad to hear you say that.
There is no CEO I've met that is more grace under pressure than this guy.
I'm so glad you said that.
He's excellent. He's doing a superb job. He started with a tough hand. And the only reason why we sold Valeant was we were spending an enormous amount of time on something that was a 2% position.
Right. It
but
gets
we felt,
right.
Since we joined the board of the company, there was an 80% turnover in the board. I was able to help recruit Joe Papa, great CFO Paul Harrington.
Yes,
right?
really strong.
From Zoetis. Done an excellent
really
job.
strong Zoetis. I actually talked about I was unhappy with Zoetis to lose, but that was absolutely a great call. But I know you helped Zoetis tremendously.
Zoetis was another success of ours. I think if you look at what we were able to accomplish in 12 months at Valeant, we got the company to a place where it was stable. The company made some progress paying down debt. And I think Joe's going to do an excellent job.
Okay, last question. No, I'm going long, but that's okay because I don't get to have you on. My friend Scott Wapner, I know he's writing a very good book, but I didn't just talk to you. We're thinking it's a golden age of activism, and that's not bad.
No. I mean, I think if you take the perspective, and I know you have a lot of individual investors who follow your show, a lot of boards, you look at a history of a company. Again, I'm a little bit focused on ADP, but I apologize.
Of course.
When the founder is around and in the boardroom, you got a major shareholder there, companies don't lose their way. It's typically after the founder steps off the board, retires, passes away. Many examples you can think of this. And the board becomes more professionalized. There's no one in the boardroom that owns a lot of stock in the company. And they get a little complacent. And I think what activism is about is putting major shareholders on boards of directors. So even though the founder is gone, there's someone there watching the store. It's a bit like the restaurant. When the owner's in the back, you have a lot more confidence. Than when the owner is sold out.
I could not agree more. That is Bill Ackman, the founder and CEO of Pershing Square, with some great points that he made about automatic data, about being a good shareholder, and also Chipotle, which is a stock that we're really pulling for. Mad Money's back after the break. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.